everyone. This is Adam Thurgood of Hightower, Las Vegas with the short and sweet executive summary version of our October 2022 client briefing. You can find the link to the longer version in the description below if you'd like. We've titled this presentation The Inflation Fight for obvious reasons. We're dealing with inflation on a wide-scale basis across the economy. And as we were putting together this presentation, a quote really resonated with us. It's by Sun Tzu, who wrote The Art of War. And he said, the supreme art of war is to subdue the enemy without fighting. And the Fed had a chance to do this last year, but they chose to say that inflation was transitory and let inflationary pressures build. And as a result, we're dealing with much higher levels of inflation than we've experienced over the past 30 or 40 years. We're now averaging about 7.3% inflation since we reopened in mid-2021. That's completely inconsistent with where the Fed wants things to go. Now, we do think there's some relief on the way in the form of lower inflationary pressures. Housing is slowing dramatically. New construction activity is projected to decline. That should put less demand on raw materials and put downward pressure on inflation. The election, we believe, will result in gridlock, which means less fiscal stimulus on the way. The labor market is where the Fed is laser focused right now. We have way too many open jobs per unemployed worker. And because of policy being so tight and focused on bringing up unemployment, we do think that there is going to be downward pressure from wages in the coming months or quarters, and the Fed will remain tight until they see that happening. Now, we don't think inflation is going to fall off a cliff. We think it'll be tough to get inflation below 4%, given some of the supply issues that we're facing and just general liquidity in the system. But we do think inflationary pressures will come down a bit. Now, this has obviously created a difficult environment for markets. U.S. equity markets are down between 18 to 20 plus percent, 29% on the NASDAQ. International markets are down in the 20s. It's been a tough year for equities, but what makes this period really unique is that bonds have performed so poorly at the same time. The aggregate bond market index is down close to 15%. Really unusual to see stocks and bonds performing poorly at the same time, at least over the last several decades. This is the worst performance for a 60-40 stock bond portfolio since 1937. So a very challenging environment, but we have been actively managing risk. We've cut duration in portfolios. We've increased credit quality. We've gone through with some tactical hedging to try and limit volatility. And as a result, we've delivered better results than the indices with less volatility over this trying period of time. But from a big picture perspective, we've seen this movie before. This is a chart that looks very similar to what we're dealing with today, but it ends in 1962. We had a big decline during that period, and we also had one in 1987. But what's interesting is when we look back at the 1987 chart and try and find the 1962 decline, it's very, very small. And if we fast forward to today and look at the decline that we're experiencing today, and then look back at 1987, it's a blip on the radar, and you can't even see the decline that happened in 1962. So time is your biggest ally as an investor, as long as you hold high quality investments, which we believe we own. And speaking of time, we're entering what has historically been a very good period for equity markets. The 12 months after the midterm election has produced an average of a 15% return from 1950 to 2019. And in every instance, that return has been positive. Now, maybe this time is different, only time will tell, but we are confident that we have the right makeup and the right structure and the right construction in our portfolios to make it through. So the best way out is always through, and we will continue to push and fight for you by analyzing markets and managing portfolios in a way that we believe is best suited to help our clients deliver results. Thank you for your time. And as always, let us know if you have any questions.